where people actually pay in store or on iPhones and everywhere in between. If you care about buy now, pay later and how to make it work in Africa, this one is for you. Welcome to Beyond the Board. I am Ala. On the show, we go past headlines to learn how fintech leaders design, ship, scale products that customers actually use. My guest today is Abiodun, CEO and co-founder of Zilla, a buy now, pay later platform helping shoppers split payments across online and offline shops. Tolu, welcome to the show.
Thank you, Allah. It's so good to be here and excited to chat.
It's great having you in the show. So,
Yeah.
what led you into fintech and ultimately Zilla?
What led me into fintech? I'll start there. Quite coincidentally, actually, because I've always had a product background. I started out as a product designer for a couple of startups back in Nigeria. And I grew a lot of interest in just building stuff and things work. I worked in the product development lifecycle, ensuring that product has my idea. I was able to bring my idea to life, and I was able to also ensure that the users like what I've also ideated and push it in their hands, and also be able to measure that. But as my interest began to grow, I became a lot renowned in my space. A friend of mine reached out to me and said, "Hey, I'm building this company and I just got into YC. We're doing some really cool stuff." I've actually been tracking the progress of the company prior to the time when my friend reached out to me, and I found it really cool. I came in as a product designer initially, and at the time, the company was doing agency banking, which pretty much enables customers and users in underserved communities to access financial services. And I came in as product designer on the team and helped them with just designing UI for the mobile app at the time, and also internal tools that the users would interact with. Over time, went on to become the product manager at Kudi, which is the company that I joined. That was my first entry into fintech, and it revolutionized how I thought about money and how money should be used and experienced. That's how I got into fintech. With your second question, which is Zilla, after a couple years working as a product manager in a couple other fintechs apart from Kudi, which is now Number, I got stuck on a problem, which is kind of weird now because I was moving houses pretty much. And when you're moving houses, you're trying to buy a lot of stuff. And because I was earning a
Yeah.
salary, I didn't have all of the money to get all the stuff I wanted at once. And I needed to get a couple of things at once. I was shopping for a platform that could provide me financing in a very measured way, in such a way that it's not going to choke my neck, as a Nigerian would say. I pretty much started looking around, and all I was getting were payday loans or extended loans. I wasn't interested in a payday loan that would charge me exorbitant interest rates because I knew I was earning an income. I knew I was going to pay this back in a very short while. And I asked around, and nobody had a solution that they use or that existed at the time. And that pretty much sparked my curiosity to know why does this not exist? Why are we not able to access credits to help, especially salary earners, to access credit and also help them buy stuff? And we just started thinking, remember my friends at the time, and we were doing our day jobs, and during the weekends and public holidays we'll come to my house and work on that idea. It became real as time went on, as we started talking to people who could be potential customers. We pretty much did a soft launch of some sort where we were pretty much like running payday loans on Excel sheets. Sorry, BNPL on Excel sheet rather. And we pretty much told folks that you could buy now and pay later at zero interest, and we will not charge you a dime, and you can pay in 3 installments. And it made a lot of sense. And I think at the time we had about 100 customers just off the Excel sheets that we were keeping records of the customers and the loans that we were giving to them, all very manual at the time. And when we saw that this became interesting, people were paying back their loans and requesting for more, we started working on a product. I took the first launch into it, and I left my job at the time and started working on this actively. Also, I was tired of that job and wanted to do something more exciting. After a couple months of thinking and also how determining how we can scale this beyond just 100 customers, which we were servicing at the time, we started working on a credit risk system. That was a whole lot of experience because I'd not experienced credit at that scale before. So I had to learn a lot during that process, talk to a lot of people, talk to customers, and we launched something really fantastic. And we went on to raise some money, which also helped us to develop the idea we had in mind and push it out to the market.
Exciting
Yeah.
times. But how were you able to reach the customers, the initial ones? When you said there was around 100.
Yeah. Pretty much all my friends and folks I've interacted with in the past and friends of friends. So it was very closed, but we didn't want to expand it to a lot of people. We wanted it to be people we knew by extension or directly. That was pretty much how we got our first 100 users. It was us telling our friends that this is something we think you would get interested in. If you want to buy that mobile phone, how about you pay it in 3 flexible installments with zero interest? We're not going to charge you interest. Instead, the way we'll make our money is we're going to charge the merchant because we're helping the merchant increase their sales and it makes sense to the merchant. This is the direct impact on your sales. It made a lot of sense to a lot of customers and we were able to launch. The more difficult part was getting merchants that a lot of people knew the bigger merchants, right? And so getting those bigger merchants at the early days was one of the major challenges we experienced. But yeah, we were able to overcome that also because of my past relationships with some of the brands that we onboarded. So we worked with the ones we could get at the beginning and used that to scale up. But yeah, that's how we pretty much got our first 100.
This is very interesting.
It is.
How were you able to establish that trust then? Was it just because they're known people that you knew?
At the very early stage, we hadn't built our credit system to a level where we could trust the result. So it was important for us to build some sort of social equity around how we verify customers for credit. It was important for us to ensure that first, you had the ability to pay back, which is directly tied to your capacity to earn or your current capacity to earn. So if you are out of job or you are working odd jobs where you don't make sufficient income, we will automatically approve you for credits, which sounds harsh, but like that is how we're working. We wanted to test this out on different skills. Wanted to test out the payment method for the merchants, which was a flexible payment method, kind of expensive compared to cards and mobile money and transfers, but it was a growth engine for those merchants. And so we wanted to test out that payment method, the ability for customers to also accept flexible payment option, which had not at the time gotten a lot of education. Like customers are not, we're not aware or they didn't know of a product like that. We are pretty much one of the first that came into the market. And so it was important for us to really test all of those things without also losing money, building a social equity around how we approve for credit because it's also a manual process. So if we don't know you or somebody that has used Zilla or a friend of ours that have used Zilla does not know you, we will not approve you for credit. The ability to earn was one part of it. The social equity was the second part of it. And also the ability to pay back, which is also very important. We looked at a combination of all of that and we were able to say, yes, we can give this guy a credit of 300,000 naira. You can go buy a phone with that money and we will pay the rest of the merchants and you can pay us back in flexible installment. And that's pretty much how we went around it at the time.
Yeah. And was there moments, that you felt, okay, this is challenging and harder than I expected?
Oh, yeah, of course. Yeah, like quite a lot actually. So from like every entrepreneur will say, it's crazy. It's crazy, especially in Africa, when you are building for customers and two-sided business. That's one part of the craze. But like also, it's exceedingly hard when you are building around credits in Africa, especially because it's a very low trust environment. Also, it is a low income market to a large extent, even though that is changing significantly nowadays. But
Yeah.
compared to the UK, the US, it is comparatively lower earning. The users are comparatively lower earners, and so it becomes hard to make a lot of things work the way you will do in the UK or in the US or in Canada. That
Or
was
there's
one
a
of the
clear
challenges we
process.
faced. Of course, that was one of the challenges we faced, and we were unable to crack some of the concerns we had at the time, but over time we were able to build over those limitations. Another concern we had was the fact that because BNPL was new in the market, the time we would have spent just growing the business, if it was an industry that customers already knew, we had to spend a lot of time on education and making them understand how this is different from payday loans, how this is different from paying with card, how this is different from paying with transfer. And it was a lot of learning curve for a lot of customers. And we spent a lot of time, money as well, just going through that education path. I think another obstacle that we experienced significantly was just around credit and getting the credits algorithm correct at the very early stages, because we spent a lot of time trying to work out that process so that we're able to make adequate and precise decisions on who we give out credit to, and that we don't also make a loss as a business. And so we had to consult quite a lot of people, both locally and internationally, and try to understand how they were able to build their credit algorithm, borrow data sources from other organizations to ensure that we were making the best decision at the time for every customer. In terms of obstacles, I think also hiring, finding really good, talented people to come work on this idea that you have. And the interesting thing about building in Africa is you're competing for talent with the likes of Facebook, you're competing for talent with the likes of Apple, and because the really talented folks who are in Africa are looking to work in
Yeah,
the
yeah.
US, are looking to work in the UK. They are not looking to work for this your very small startup. And so being able to find a way around it in such a way that you can chase your dreams, but can you give me 3 months of your time? Can you give me 1 year of your time? Let's work on this part of the problem, and then you can go on and do your thing. That was quite a hurdle to go over, because you don't want to also get talent who will drag down the product development timeline, because you have customers banging at your door that they want this new feature, they want this new thing because they really love your product and they want an improvement to how they experience it. But you also want to get people who availability as well, and also the ability to work on what you're working on. I think those were the major challenges I can think of right now, because if we go through all of the challenges, I don't think we'll leave here today. It's quite a challenging task building businesses in Africa. But yeah, there were a lot of good things that came out of some of those challenges, because we paved the way for some of the other businesses that came into the market later on.
It's an interesting point around talent. This morning, I was talking to another fintech leader in Africa.
Yeah.
We were saying that many Africans aim to earn an education outside of Africa and
Yeah.
never come back to use that talent in Africa. And,
Yeah.
and, and that's why sometimes it's a struggle. My last question before we go into the landscape on fintech across the continent is, remind me again, when did you start Zilla and how many fintech companies now in Nigeria are doing the similar model or buy now, pay later?
We started in 2021, just after COVID. We wanted to ensure folks were able to, again, buy now, pay later, and also flex their payments in easy installments. From that time to now, we've seen quite a number of startups spring up, which have now started doing buy now, pay later, and that's been exciting. The market took like a weird turn when the new president came in, with the devaluation of the naira, with the increase in the price of petrol, general
Yeah.
inflation. Inflation shots up from about 15% to about 40%, and just started trending downwards. So it became increasingly hard for a lot of buying startups to progress past that point. And so, because with buy now pay later and just flexible payments in general, The crux of the business surviving is pretty much on the customer being able to spend. So if consumer spending is low, which became apparent when all of those hikes happened in Nigeria at the time, people are not going to want to buy things, and or they don't want to buy things in flexible installment because, like I mentioned, one of the things we did when we're doing education is removing the bias and the stigma attached to taking out credit in any form. We then realized that if people had very low consumer spending and did not have sufficient enough to spend apart from the basics, which is rent and food and transportation, maybe it became very impossible for them to consider buying other things which they will want to flex over a period of time. And we then had to think of what else can we do with what we are building and how can we improve on this to ensure that we as a business don't die, but also the stuff we have built does not go to waste. We had to pivot as a company in 2023. We started working with some of the merchants that we provide flexible payment checkout for, and we gave them the, because one of the contents also we experienced at the time was that a lot of merchants were saying they were not able to finance some of their purchases from the US, the UK, and China, and whatever. And so, what we went on to do was provide these businesses payments or payment plans for them to buy their supplies from China. So, we went from giving out very smaller size loans to customers to giving out very higher ticket loans to businesses. Were very short term. For customers, the maximum was for 3 months. For businesses, the maximum was for 1 month. And it made a lot of sense. So they're making a lot of money from that channel. And so we noticed that they were making complaints about being unable to make payments to China because at the time there was also part of the central bank's implementation was regulating the FX markets, and so the availability of dollars was very restricted. We saw that as an opportunity to leverage stablecoins and use that to ensure that our businesses, the merchants that works for us, can pretty much make international payments to those customers. And so we went on from financing those payments and then working towards making those payments. That's pretty much what we've transitioned into now, and it's been couple months since then, and it's been quite successful and growing. We still have the buy now pay later bit of it, but the activity on that has tremendously reduced. I can go into a couple reasons why. I've mentioned the consumer spending also, but a couple reasons why that has not been as successful as we would have wished is because credit in the form we're taking was something that was newly experienced. The style and way credit will work in Africa for now is still pretty much going to be around payday loans and extended credit. And so until consumer spending goes up, it might take a while for us to get that back into the markets. We've seen quite a number of startups also try and attempt it. Some of in different variations. For example, my friend Toby runs a startup called Pay Small Small that does buy now pay later, but like instead of you to get the item immediately after you pay your first installment, you
Still
get
be
the
from
item.
who, right?
I'm not sure it's the same one, but this pretty much runs a startup called Pay Small Small.
Yeah.
Yeah. You can pretty much get your item. It just increases the ability for you to also manage the repayment patterns.
Yeah. It sounds like a good sort of turn that you've taken with Zilla.
Of course.
Right now, the focus is only on B2B.
The focus is exclusively on B2B, correct?
Right. Okay. So I want to see how, the fintech in general across the continent.
Yeah.
How do you see payments and fintech in general landscape evolving across Africa right now?
Yeah, like fintech has really changed and grown. And because I'm also very Nigerian in how I've experienced the fintech industry, looking at it from say 2012 when InterSwitch was the major player in Nigeria for card collection. Before you could open an account with InterSwitch, you had to pay some ridiculous amount of money to have their APIs. And Paystack came into the industry, broke that barrier. Flutterwave came and took that card collection process to greater heights and pretty much ensured that folks like Uber, folks like Domino's could do card collection online. And that's one part of fintech which has changed significantly. We've had folks like MoneyPoint pretty much enabled virtual accounts for customers across the country, pretty much enabling businesses to accept pay with transfer. The company I used to work for as well, Kudi, pretty much ensured folks in undeserved, underbanked communities are able to access financial services. We have experienced phases of growth and gone from periods where you could not do this particular thing at all to a time where it's pretty much easy. Right now, if I'm in business and I want to start accepting card payments, I don't need to have a luxurious kind of engagement with the company that I'm trying to get these APIs from. I pretty much just will go to, for example, like a paystack.com, create an account for free, and start collecting payment like right away. And that is being like a major change. Even with open banking, folks like Mono, folks like Switch in South Africa, folks like now the other company is the Okra. They used to be a very big player in open banking, but they've pivoted as well. And you could see that like all of these businesses coming into the industry to improve things that were very crude. Even when we were buying our pay later, the buy now pay later space was very crude and non-existent, if you will, but that has significantly changed as well. And that's one of the interesting things about a market like Africa. There are so much opportunities to work on. You find a problem that has not been even tapped in. You find like things that have been in existence for quite a while in developed markets like the UK, developed markets like the US, and you go to Africa and they do not exist at all. So it provides that opportunity for you to build and solve for those kind of problems. There are a lot of problems to solve for, which makes Africa an interesting and exciting market.
Yeah. In terms of regulation, I'm sure you have an idea of the regulation when it comes to fintech in the US and here in the UK. How do you see it evolving in Africa? Has there been a big obstacle, or you find that it's slightly easier now and things may change in the future?
I hope things change for sure because one of the things that has been the style, if I would say, of a lot of regulators in Africa is to ban first and then regulate, which I think can change. So with respect to crypto, for instance, in 2020, where the Bank of Nigeria pretty much puts a red tape on crypto. That's pretty much changed now with the new government. What would make a lot of sense would be systems that will transcend governments and new policies and ensure that we can actually proactively create regulations that pretty much will make businesses to operate with a lot more peace of mind and ensure that customers also are protected as much as the corporates. The impulse to always ban new innovations, new experiences, it might not be the best thing for folks who want to create in Africa because like I mentioned, there are a lot of opportunities to work on. There are a lot of opportunities to build for. And so when I come into the market and I see this problem and there's no regulation for that problem at the time, I'm excited to build. And now I've built this really amazing thing. And then the government says, oh, I'm not sure like I like how you're doing this. And then you start to trim it down. That's going to push a lot of builders away from building in Africa. Governments have been working proactively. The Central Bank of Kenya as well have been working with folks who do cross-border payments to ensure they can also properly regulate the market. Central Bank of Nigeria, SEC in Nigeria have been doing tremendous work towards working with fintechs and startups to help build a regulatory framework that works for both parties and also protects the customer.
Yeah. It's sometimes an unsteady market in terms of regulations. We're still not there yet, and also stability as a whole.
Of course.
the governments across different countries in Africa, and that could affect. But it makes you more resilient when it comes to business. Have to pivot
Yes,
and change.
you are prepared for the next thing that can happen. I know when I was working at Kudi, the government will come today and say, "Oh, we have to include stamp duty to transaction fees." Immediately, you're running to ensure that you can launch that so you don't incur stamp duties on transactions processed daily. It's quite an exciting market, quite frankly, because you are prepared, you are resilient, like you mentioned. Yeah.
Yeah, it must be. We move into innovation and AI. First, how is Zilla leveraging AI now? Is it in fraud detection, for example, customer support? How do you see it becoming integrated into fintech companies across the continent?
Yeah, like artificial intelligence is taking a big wave this period, and it's been exciting. How are we applying AI? First and foremost, AI has helped us build better and build faster. So our engineering team pretty much today have adopted like AI tools with to help us code faster and better. So that's one particular way I can pretty much like attest for. But for the business, we pretty much have been able to integrate artificial intelligence in how we detect fraud and also how we screen customers and screen transactions. Before now, we were manually screening transactions, especially with international payments. We were manually screening transactions that were outliers, and we created some rules ourselves and used some if else statement on our code base, and that worked for the time we were really small. But now the power of AI has helped us to see patterns and also trim and cut down on those transactions that follow weird patterns. And so we've pretty much been able to like improve rate of fraud. We've been able to also reduce significantly false positives on transactions that we would have flagged if we were manually doing that ourselves. And that's improved like the operations of our team significantly and helped us attract new and better customers. Yeah, it's pretty much been tremendous in how we think about the payment life cycle of our business.
How do you see it then across the industry as a whole in Africa? Many fintech companies leveraging AI at the minute.
Yeah, I think compared to the US and like developed markets, I think it's still like an adoption. There's a lot of adoption happening with AI in Africa. I know a couple of startups doing heavy work in AI. An acquaintance of mine pretty much is building this AI voice assistant that can pretty much do customer support for you and your startup and your business in your local language. And so the
Wow.
customers who call in can speak to the AI support in Twi, in Yoruba, in Igbo, in Zulu, in whatever language that is local to Nigeria or to Africa, I mean. And I know the lot of those kind of innovations will be springing up over time, and we're going to be having a lot more businesses utilizing AI on a very functional level. I think over time, like the way payments did not catch up until the early 2010s, we will also get to the point where it becomes essential for us to adopt AI on a very functional level. I know a couple of startups that are already adopting that, even if it's on a granular scale in terms of just helping us build faster and build better. I think that's a very good success already.
Yeah, that's right. Tulu, this was excellent.
Yeah,
Thanks for
thank you.
going beyond the board with us. We will link Zilla in the show notes where
Thank
should
you.
listeners follow your work and see what you're building and doing. Thanks for listening to Beyond the Board. I am Ala. See you next time.